wars are not short, and they're not so easy to win. Economists, they are sharpening their pencils, forecasting what a protracted U.S.-China trade war would cost. A Morgan Stanley analyst note finds the window for resolving the trade dispute is narrowing. Without resolution in the next month, the trade war will bite into global growth. Uncertainty is high. Key paragraph. If talks stall, no deal is agreed upon, and the U.S. imposes 25% tariffs on the remaining $300 billion of imports from China, we see the global economy heading towards recession. The Fed would have to cut interest rates, ultimately back to zero, and China would need huge new stimulus. At Bank of America, analysts there report the trade war has already hurt confidence on Main Street, noting a protracted trade war could have a meaningful impact on consumer spending. And America's top retailers already bracing for that impact. Retailers depend heavily on China for their supply chain. Retail and fashion industry trade groups say 41% of all apparel and 72% of all footwear was imported from China in 2017. Tariffs will mean higher prices for consumers or lower profits for companies, which can mean fewer jobs. Over the past year, the White House has imposed tariffs on foreign steel and aluminum, on $50 billion in high-tech goods from China, on another $200 billion in commodities and manufacturing components from China, and has now begun the new process of putting import taxes on virtually everything else the U.S. buys from China.